Thank you, Sanjeev, for being here and
Thank you for calling me.
Pleasure. So your story, I think, almost is like the initiation of an era of internet ventures, internet businesses. And when you started, you would know internet adoption in India, the number of users was really getting started. And when the target audience was so very small, so how did you build a conviction to start a business in this market?
So I quit my job in 1990, and for 7 years, you know, I drifted and we did a bunch of small things.
Okay.
Salary surveys, teaching, training, trademarks database, small-time consulting, wrote half a book, whatever came my way in order to survive. And in 97, we launched Naukri as one more small idea.
Okay.
So we had no clue how big the internet would become. There was no venture capital in India. There was, no money, poor infrastructure. We were just scraping around and getting by.
Yeah.
Right? And so Naukri was one more nifty small idea.
Okay.
तो उस समय 14,000 इंटरनेट अकाउंट्स थे देश में.
That's all.
14,000.
Wow.
With shared account usage, maybe 1-2 लाख लोग यूज कर रहे होंगे. But to me, it looked like a large enough number. And so अब इसी में बिजनेस चलाना है, इसी में पैसे बनाने हैं, एंड सर्वाइव करना है और ब्रेक इवन करना है. यू डोंट थिंक भाई इंटरनेट कहाँ हो जाएगा, वेंचर कैपिटल आएगा, कितना बड़ा होगा. वी हैड नो क्लू. On this level of user base, if we can get 1,000 companies every month to pay us 500 rupees to list one job, that's 5 lakh rupees a month.
Wow.
That's 60 lakhs a year. And if you can get to 60 lakhs a year in about 3 years' time, that was my go-to goal for success. We had a sales target. कोई vision नहीं था. वो बाद में people have attributed to us in hindsight कि visionary. But the truth is we had a sales target.
Yeah.
That's it. तो पहले साल में हमने 2.5 लाख लिया, दूसरे साल में 18 लाख, तीसरे साल में 36 लाख.
Wow.
We didn't hit 60 lakhs, but we were breaking even. I wasn't taking a salary. I was still doing my teaching, training, some part-time journalism, all that.
Yeah. So I think the sense which we are getting, Sanjeev, from this is that you are very an organic entrepreneur, just, started executing what the heart was feeling right. And these sales numbers of the first 3 years, these would be the defining numbers because you still remember them by heart. And very important thing which you said, which I want to develop on further, is कि यही business है, इसी में पैसे बनाने, which means that profitability as a principle was core to your heart.
We had to break even to survive.
Yeah.
We could not survive if we did not break even.
Yeah.
Because we had no reserves of cash.
So that discipline was always the foundation.
That was a necessity.
Yeah. In the initial years, now you would have started this business now, it started rolling, the numbers which you said, numbers would have kept on growing. Was there any time in the first 5 years we thought your business nahi chalega?
So we were fortunate enough to raise venture capital from ICICI Venture in April 2000.
Okay.
And we were fortunate, extremely fortunate, that we raised it 2 weeks before the dotcom meltdown.
Okay.
What it meant was we got the high valuation, but we didn't have time to spend the money foolishly, which everybody else was doing.
Yeah.
So this money went into fixed deposit in the bank, and we would spend slowly. So we had this, now we had gas in the tank.
Yeah.
Nevertheless, as times were uncertain. पहले dotcom meltdown हुआ, फिर IT meltdown हुआ, फिर 9/11 हुआ. Economy went to a tailspin.
That's
right. It was a recession. It was a global recession. When all of this happened, there was a point we had begun to sort of hire people, technology, servers, rented new office space, all of that. And there was a point in time in maybe 2001 where our monthly salary bill, just the salary bill, was 4 times our revenue. And we had 16 months of money left. And there was no hope in 2001 of getting any more money because all the venture capitalists had vanished. We were suddenly horrendously overvalued. तो कोई पैसा मिलने वाला नहीं था. So at that point of time, it looked like survival was going to be a challenge.
Okay. So what decisions did you take at that time which made you survive?
So I think Hitesh came and said, let's hire some salespeople.
Okay.
Before that, we were selling by direct mail.
Okay.
So हमने 4 sales के लोग लगाए. Right? And we learnt something very important. So the cost of the average salesperson in 2001 was about 22,000 rupees a month.
Oh, that's wow.
10,000 तनख्वाह, sales commission, conveyance, you load on the overheads, the office rent, the air conditioning, the depreciation of the computers, all of that. So 22,000 आता था, fully loaded cost. But within 6 months, the average salesperson was generating 50,000 rupees of sales,
Okay.
headed north. Variable cost was next to nothing, only sales commission, which are already factored in 22,000. So 28,000 का surplus आ रहा था per salesperson. So we said we have found our model,
Okay.
our growth model, and we defined a term called repeatable profitable unit. That was our jargon which we created.
Okay. Which is called unit economics also, like.
Yeah. So we just said keep hiring more salespeople until the last guy doesn't break even on his own cost.
Okay.
And when we did that, we grew 35 times in 2 years
Wow.
and began to make up a decent profit. We hit an 11 crore turnover with a 80 lakh profit.
Yeah.
A 10 point some crore turnover, 80 lakh profit. And you know, at the end of 2 years, we had 240 salespeople across 11 offices. So what we would do is we would go to a new city. We would hire a cabin in a business center, what
Okay.
is now called a co-working space. So the business center was
Business
there.
center होते थे.
So that we can, you know, in case it doesn't work, we can leave. You know, there's no long-term lease, there's nothing. No capex and furniture. And we would hire 2-3 people. And they would go out and sell. And the target was that you have to break even, the branch must break even in 6 months' time.
6 months time. Yeah.
And then you can move into your own office
Yeah.
and grow the branch. And in no city did we have to shut down.
Oh.
So we executed very well. It was a good product. There was demand for it. Clients wanted it. It did the job for them. Right? And the sales execution really saved the company at that stage when we had only 16 months of money with no hope of getting any further funding.
So as they say that, you know, an opportunity is always hidden in adversity, and you found that opportunity and you executed that. And I think one key decision which you took, you know, in these situations, typically founders and entrepreneurs, they take 2 decisions, or either of the 2, either increase sales, which you did, or cut costs. So you focus on increasing sales.
See, cutting costs में ज़्यादा scope था नहीं. We were frugal anyway.
Yeah.
And we did not have crazy expenses.
Yeah.
It's just that we had very low sales.
And then this journey, this phase continued once you figured out this model, you know, this is like a modular model, kept on replicating it. So it continued for next 10 years, 15 years?
देखिए, beyond the point, you know, you did not expand your sales team that much. Beyond the point, obviously you were at the same time launching new products and services. So when we raised venture capital in the year 2000, we had 2 products. One, a single job listing for 350 rupees. Second, annual subscription, 6,000 rupees. Now, obviously, once you have a sales force, you can sell more expensive products because direct mail पे लोग उससे ज़्यादा पैसे देंगे नहीं. But then we introduced a premium job listings. We introduced resume database. We introduced a whole bunch of things which would create more value for our clients, and we could therefore derive more value for ourselves. So I think a lot of product innovation, a lot of tech innovation, you know, went alongside. It was not just a sales effort, because we were selling more and more of better products, bigger products.
So Sanjeev, when you started your journey, as you said, it was really, really very early days in an economy, in a market like that, and there wouldn't be any competition. You would be the first starter. When was the first time when you encountered first competition?
I think there was from Times of India, we got Times Jobs and Careers, which later became Times Jobs, and we got Jobs Ahead,
Okay.
funded by Chris Capital. And then Monster came in.
Monster came in, yeah.
And then there were a whole bunch of others, Job Street, Jobs DB, eventually LinkedIn.
So how do you see that phase when you encountered the first time the competition? Did it help you or?
We got paranoid. You see, the first time, हुआ क्या था कि around the middle of 99, I began to get calls from people saying, we'd like to invest in your company.
Okay.
So we didn't know what venture capital was. We didn't know what an investment banker was. हमें कुछ पता नहीं था. Right? We were running out of my home in Jamnabar, in Swasth Vihar. And we were in a cocoon. We were a frog in the well. We were quite happy.
Yeah.
Right? And so then I went for a couple of meetings and I understood that, okay, there's something called venture capital. But they were talking very complex stuff, which frankly intimidated me. So मैंने मना कर दिया, हमको venture capital नहीं चाहिए, thank you so much. हम इसके काबिल नहीं हैं. Which in hindsight turned out to be a good decision. Because if we had raised venture capital early, we would have spent it like the others were spending it. And then got stuck in a high cost trap with no further money coming in. Because we raised it late, we didn't spend it on the wrong stuff. Our first sort of encounter with competition was in Feb 2020, in Feb 2000, when Jobs had launched with a launch ad campaign on TV on the India-Pakistan one-day series.
Oh, wow. Massive visibility.
Yeah, and when we inquired, we learned that the launch ad campaign cost 75 lakhs. Our annual turnover was 36 lakhs. So it's a 2x of annual turnover spent on launch ad campaign.
Yeah.
So which is when we got really scared and we said we can't survive this, without raising money. So we were a profitable company, breaking even. I wasn't taking a salary. And we went out to the market and raised money and said we've got to invest. And therefore we went into a loss for 2 years.
Okay.
Because we had to face that competition.
Yeah, yeah.
So we raised about 7.3 crores. Jobs had raised 28 crores. But we sort of, we were helped by the meltdown.
Yeah, yeah. So that could be your second inflection moment, after the first one when you realize the importance of increasing revenue.
Oh, no. We hired salespeople only after raising venture capital.
And now, you've got investors, you've scaled Naukri's business, and business is doing well, it's scaling very well, it becomes profitable. When was the time when the first thought came that it has to evolve into a platform which we all know as InfoEdge? So,
the company was always called InfoEdge. Naukri was a brand. But essentially, we were a single product company, which is a job site, brand name Naukri. Now, what had happened was that in '98, we had also launched a matrimonial site, Jeevan Sathi.
Okay.
But we just let it float and did nothing with it. No people, no money, just let it float, self-service free.
Okay.
So that was going along. Meanwhile, Bharat Matrimony and Shadi launched. And that was their only business, and they focused on that, and they did very well.
They did very well.
So we became number 3 very quickly. But we were not bothered. When you raise money from ICICI Venture, they said that ये जीवन साथी वगैरह क्या है, ये बंद करो. We are investing in Naukri, don't waste your time. So we said okay, and they also said change your auditor.
Okay, why was that?
They wanted a big 5.
Okay.
And we had a small audit firm, friends basically. And so I went to them and I said, guys, sorry, we got to change our auditor. We're going with PwC. So they said, hey, no problem. We are thinking of shutting our practice and starting a dotcom anyway. dotcom boom चल रहा था उसमें. तो so हमने बोल दिया, boss, we have a matrimonial site. ये आप ले लो.
Okay.
Farewell gift, we'll keep 45%, you take 45%, 10% we'll give to a few other people.
Okay.
And up chala lo. So they said, okay. So Jeevan Sathi was given to them, but we had 45% ownership. Okay. अब Naukri broke even, Naukri grew, and Naukri made money. Now in the shareholder agreement it signed with ICICI, we had given them that in 3 years' time we'll give you an exit,
Okay.
right? And if we fail to give you an exit, then there's a whole bunch of things they can do. They can sell their shares, they can drag us along, they can,
Okay.
all that. Now, in 2004, which is 2003, which is when 3 years got over, there was no hope of any exit. Company 10-12 crore कर रही थी, profitable थी, but IPO कोई सीन नहीं था.
कोई सीन नहीं था.
And I didn't want to sell the company. So we wrote ICICI a letter saying, can you give us an extension? And they got back saying, no, we can't, and we want an exit now. It was another of the dotcom bust.
Yeah.
So nobody was confident.
Yeah.
So अब 3-4 महीने उनसे negotiate किया. Finally we agreed हम आपको 12 महीने बाद we will buy you back at 10% IRR.
Oh. But you had the resources for that? No.
That's why I said 12 महीने बाद. Now the whole thing became 12 महीने. We have got 12 months. Clock is ticking. We got to find somehow how do we buy.
Their share.
It basically means 10 crore देने. 7.3 crore उठाए थे, 10 crore वापस देंगे. This is now 2004. 12 महीने. Anyway, life went on. I went knocking on every door.
Okay.
कि पैसे दे दो, ऐसे खरीद लो.
Investors, more investors.
Investors, bankers, I mean some.
Some, okay.
No joy. Nobody wanted to touch us with a barge pole. ये क्या चीज़ है? 10 करोड़ में 15% मिलेगा. ऐसे लोन दे दो. We'll buy them out. No. So debt guys, equity guys, nobody. साल लग गया. Meanwhile, the company kept making money because growth was happening, profitable growth was happening, and ICICI को MIS जा रहा था हर महीने. So when we had accumulated enough money, I said we can pay our first installment. That's early. So it's not 12 months, 9 months. I take one installment right now. As per what we agreed. And they turned around and said we've changed our minds.
Okay.
The companies are looking good. That's fantastic. We had this very 8-10 crores in the bank, which I had been saving.
Saving from the profits.
To pay ICICI.
Okay.
We had been saving it. So then we said, what do we do with this money? Okay, we can keep our accumulated cash. But then we had a brainwave, why don't we buy Jeevan Sathi back?
Okay.
So we went back to our former chartered accountants and said, boss, कुछ हुआ नहीं आपका because आपके पैसे रेज नहीं हुए. मेल्टडाउन हो गया. हाँ, मेहनत कर रहे थे वो. But I said, why don't we buy you guys back and you get a decent return on the last 3 years. Because they had not paid us money for the shares. We had just given them at par. Right? So we bought them back. So suddenly we became a classifieds company and not a job site company.
Okay.
When we did that.
Yeah.
And then we launched then we launched Shiksha. Because once we began to regard ourselves as a classifieds company.
So that's how the shift in the mindset.
Yeah, so a lot of it was, I think, serendipity, accident.
Yeah.
I mean, हमने नौकरी लॉन्च की 1.5 साल बाद ब्राइट आइडिया आ गया. Idea of the day. जीवन साथी लॉन्च कर ली.
Yeah.
ICICI said, भाई ये बंद करो. So we gave it to our former auditors. And then when we had to buy out ICICI and we were saving money for it, they changed their minds. And we used that money to buy them back.
Yeah.
So what in hindsight people may say is strategy. It was not strategy.
Yeah, no, it's coming out that way that one step at a time. As they say, you cross the bridge when you reach there. That's how I think it has happened over the years.
Yeah.
Very organically, and I think that's how most of the long-lasting businesses are built also, because solving multiple problems on the way. It's like a trek, right? To go on a journey. So
I think trek is a good analogy.
Yeah, trek is a good analogy because every time you reach a summit, you then are able to see the next summit, which is एक और पहाड़ उस पर चढ़ना है. And that is what typically the journey of every entrepreneur is, right? I think one word which keeps on coming again and again out of the journey which we have discussed till now is profitability. I think your focus on and your discipline about profitability. So now the times have changed. In the times when you started, there was no capital available and you had to be frugal. But now when an entrepreneur starts, the thinking is let me raise capital, build market share and profitability will follow. What are your thoughts on that?
देखिए अब तो पहले 10 साल में देखो हमारा डीएनए बन चुका था. इट्स वेरी हार्ड टू डिपार्ट फ्रॉम योर डीएनए, राइट. अब अगर आपका हाथ पैदाइशी टाइट है ना तो वो टाइट रहेगा. You will evaluate. That's how we are. At the same time, we recognize that there are others who are not like that, and great value can be created. And if competition is raising, they willy-nilly will have to raise. If competition is spending, they willy-nilly will have to spend in order to compete. So we recognize that times have changed. We are not like that when we run our businesses. But we have invested in many startups which have raised much more money than we ever did.
And maybe this could have been the trigger behind now then going beyond Naukri and Jeevan Sathi to maybe invest, find a Zomato or a...
No, so you see,
something like
it was
that.
one more accident.
Okay. So let's learn about that.
अब हुआ क्या कि around 2004 ending, company is growing, is profitable, we're mid-size, I think 35-50 crore जितना भी था, 44 crore था top line मेरे ख्याल से, I'm not sure, but growing, doubling, right? I got a call from a classmate, IMA classmate, who was based in Hong Kong, working in Morgan Stanley, Hong Kong. So I'm coming to Delhi, can we meet? So I said, huh? So met him. It was Rohit Silbai-Malani, who was then Morgan Stanley, now in Temasek. And he said, listen, China's #1 job site just went public by one job.
Okay.
We think it's time for India's #1 job site to also go public. You can do it. I've studied our numbers. So we got very excited because the objective we had set for ourselves कि कभी public जाएंगे to give the investor an exit. हम बेचेंगे नहीं company. हम public जाएंगे. It looked like a possibility. This is 2004 end. We had raised money in April 2000. So, 4-4.5 साल.
Yeah.
So we went to our board and said, ये बात हुई है. They said, very good. Go for it. So हम Hong Kong गए, सबसे मिले. And, we met Morgan Stanley, we met some investors, we met some lawyers. And at that time, Morgan Stanley was advocating a US listing, a NASDAQ listing for us. And what happened we began to sort of talk seriously, and then in June 2005, the government of India, or SEBI or whatever, they passed a rule, MCA I think, passed a rule that says that no Indian company can list in an overseas stock exchange without listing in India first.
Okay.
So it became an Indian IPO. We are happy with that because it meant less complications, regulatory-wise for us. Sarbanes-Oxley, all that, Overseas listing meant, you had a chance of being an orphan stock, research coverage, you're always on the road to meet investors overseas, midnight conference calls. It became a lot easier if you're listed in India.
Yeah.
So we were going for an India listing. So we retained the bankers.
Morgan Stanley?
No, it was Citibank and ICICI Securities.
Okay.
And we began to work on the DRHP.
Okay.
We were hands-on on the DRHP. In the sense that हमारा conference room होता था, वहाँ पे 10-15 लोग इकट्ठे होते थे. The two bankers, 2 sets of lawyers, हमारी team. And on the projector, we projected the document. Right? And we went over the DRHP, every clause. So I had read every clause.
Okay.
Okay. This is now, you're going public, you're committing something to the public, to SEBI. You better be sure what you're signing off on.
Yeah.
So we read every clause. So DRHP एक section होता है कि objects of the issue, why you are going public. So I said, I know why we're going public. I'll go home I'll come back with this section written out
Okay.
tomorrow.
Okay.
I'll show you tomorrow. मैं आज रात को कर दूँगा. So I went home and I wrote 5-6 bullet points as why we're going public. Well, to give the investor an exit, to be in a different strategic space, to have perpetual access to capital, to make the ESOP have value, to have our stock have currency, we can acquire, you know. तो मैं लेके आ गया. So the banker started laughing and said, यार ये तो नहीं चलेगा. I said, क्यों? He said, this is why you want a listing. This is not what you'll do with the money. SEBI wants to know what you'll do with the money.
Okay.
So उसमें ना 3-4 standard होते हैं. वो हम you cut paste, you know, from other places. हम कर देंगे.
Okay.
So he came back with organic growth, inorganic growth, general corporate purpose.
Very generic.
2-3 more. 5 थे. And we went with it. Went public. IPO successful. So the truth is that we didn't need the money for any of those 5 things. We were profitable. There was cash accumulating in the bank every month.
That's right.
So every quarter, PwC would come back and tell the board, use of IPO proceeds nil. So 2-3 quarter बाद, the board said, listen Sanjeev, what the hell is this? You know, you committed to SEBI and you raise money from the public for these 5 things.
And you're not using it.
And you're not doing it. This is not okay.
Yeah.
So we racked our brains. क्या करें? So organic growth तो चाहिए नहीं. Business are profitable.
Okay.
Inorganic growth, you know, general corporate purpose, we don't want to buy land and building. That's bad use of capital, according to us. So, बचा inorganic growth. अब inorganic growth में there's nothing available to buy, which you want to buy at a price which you want to buy it. So then we got a brainwave, and we said, यार इतने सारे startup try कर रहे हैं, venture capital कम है. In 2007 venture capital कम था. Why don't we invest in startups? ये भी it's a type of inorganic growth.
Absolutely.
So we went back to the board. Yeah, idea हमारा. So board said, good idea. Start investing in startups. You can invest up to 160 crores, which is the size of IPO, in the next 3 years. And that's how we began to invest.
Oh, I see.
ये कोई vision strategy. It was a need for compliance.
Yeah.
That we began to invest.
So in a way, I think what is coming out so very nicely, and with sheer consistency, is that, you know, every decision in your journey was forced by circumstances.
There were circumstances which we grappled with and came out with a solution.
Yeah.
And in the case of investing, this is how it happened.
Yeah. But you know, what is, you know, emphatic is that whatever decisions that you took because of the circumstances were bold decisions. And including the one, you know, the very few listed companies whose boards will have the courage to go out and invest even in listed companies, and you decide to invest in unlisted companies. So that was actually a very, very forward-looking.
Well, we had said inorganic growth in our DRHP, and this is a form of inorganic growth, and we were investing small amounts in many companies. So it is not as one big risk.
Yeah.
Okay. So हम करते गए 4 साल 5 साल. So by the end of 2012, we had invested about 200 crores in, I think, 9 or 11 companies.
Okay.
Of which 2 had already blown up. And nothing looked like succeeding. Of these 9-11 companies, 2 was Zomato and PolicyBazaar.
Okay.
But it was too early for them to look like successes.
Yeah.
Nothing looked like succeeding. Meanwhile, analysts and shareholders and investors began to get very concerned. And they began to give feedback to our IR person, to our CFO, to people that, you know, I think, look, all Indian entrepreneurs are megalomaniacs. Sanjeev is no different. They believe in over diversification. Why is he doing this? He's taking good money and just wasting it, throwing it away. Sanjeev is a one-trick pony. He got lucky on Naukri. He's not that good. ये हमारा पैसा बर्बाद हो रहा है. Kindly stop this. So the board got concerned and they discussed with me in 2012. I said, यार थोड़ा break लगा लो. So I agreed with the board that okay, fine, we won't invest in any new companies, but we'll continue to support the existing portfolio.
Okay.
We can't leave it halfway and half done and
Yeah.
they will die.
Of course.
So we kept backing the old portfolio, which included Zomato, PolicyBazaar. By 2015, what had happened was that we did a QIP in 2014 because housing had been launched and they were spending a lot of money
Yeah.
at that time, having raised a lot of money from a lot of investors.
Yeah. Yeah.
And they had they were turning up at public market investor conferences brought by the bankers saying, look at this company, it's going to beat 99 acres. And therefore InfoEdge is, you better be careful on InfoEdge. And our shareholders, investors, institutions at those conferences, listen guys, you have a problem. You should buy this guy out whatever price or sell to him. He's a genius. And we looked at it and we said, no man, we are better than housing, 99 acres. So what we did was, we did a QIP of 800 crores, 700 crores, some $100 million, something like that. And announced this is a war chest for 99 acres versus housing. What that did was, it gave other investors a pause that this is going to be a bloody fight. Before we invest in housing, we should think. And within 6 months, there was a fallout between the founder of housing and the investors, and he walked away, and there was blood on the street and all of that. And we had this 700-800 crores, which are not touched, and we had said it's for housing. And so, okay, so by 2015-16, it looked like Zomato and PolicyBazaar would succeed. The same investors came back and said, why have you been sitting idle last 5 years? You're wasting time. Sanjeev has lost his mojo. He does not take a risk anymore. He's not invested in any startups last 5 years. Missed opportunity. So the board said you can start investing again. We have the money also now. So 2015 to 19, we invested in some 11, 12 more startups.
Okay.
So first lot, 10, second lot, 11, 12. In this lot, by then I got half a team for investing because I was doing it part-time myself. Another part-time guy, Vivek Khare, was helping me. By 2012, Katie Agarwal joined. And 2015 to 19, for the first 3 years, she managed the whole portfolio, worked with me, learned the ropes. Then began to invest 2016. Between 2016 and 19, we did about 11 companies. Kitty hired a team. Rishabh Katyar, Roshan Bharti, Sumit Jaiswal, a few others. And we began to invest again.
Okay.
2018, our CFO then, Chintan Thakkar, came and said, we have a problem. What? This Zomato and PolicyBazaar are going to be so wildly successful that if we sell those shares, we will become an NBFC.
Okay.
Because our financial income will exceed our operating income. And if you become an NBFC, then you get all kinds of complications, RBI, licensing, regulations. Then to open a new Naukri sales office, you need RBI permission.
Okay.
So this is not a good idea. So let us do one thing. Let us do all future new investments through an AIF, a venture fund, SEBI approved. And हमने AIF launch किया, InfoEdge Ventures. Again, a consequence of regulation.
And
we launched that. We committed 750 crores there, which is roughly what we're investing every year, 250 crores a year we're investing. So 750 crore वहाँ पे हमने commit कर दिया. ये 2019 की बात है. 2020 में कोविड हुआ, 3 महीने का लॉकडाउन. April, June 2020, Naukri sales grew 44%, minus 44% YOY. There's money in the bank, but we don't know what's going to happen. So the board had a call in maybe May sometime, and it was decided that we would halve the commitment to the fund. 750 crores, 3 try करेंगे. अब I told the board that we have hired, we have invested, we have a strategy, we've given out term sheets basis a 750 crore fund. So is it okay if we go outside and get the balance money into the fund from external LPs? Because up until then we were the only LP.
Okay.
So it's okay. So that's when we got in Temasek.
Okay.
So they took half the fund, we did half the fund.
Okay.
So now we have 4 funds with Temasek.
Oh, I see. And managing, what is the total corpus?
यार पहला फंड था फंड 1 + फंड 1 फॉलो 1 1500 करोड़.
Okay.
फंड 2 was I think 1000 1100 1200 ऐसा कुछ था करोड़. कैपिटल 2B, the deep tech fund, is about 600-700 crore.
Okay.
And then there's the old balance sheet investments, but now there's a fund 3.
Okay.
And there's a deep tech fund and a growth fund. So कुल मिला के होगा 5-6 crore all told commits, of which a portion is not from Info Edge, it is from external LPs.
External LPs. That's a sizable corpus in the venture space,
Over 19 years.
19 years.
So it's not one time.
Yeah. And that situation where when Chintan told you that if we sell the shares, we will become an NBFC, did that also then force your hand not to sell those shares?
No. We discovered that, then when you look at the fine print, cash is not a financial asset.
Okay.
And it's not just income, it is also assets. You need to meet both the things in order to be an NBFC. So we could have not been an NBFC.
Yeah.
But you see what happens also if you're investing on a balance sheet, it gets very complicated. You're a listed company. You got to report results quarterly, which means you got to consolidate quarterly.
That's right.
And these are startups who may or may not be able to give you accurate, reviewed by auditor numbers every quarter.
Yeah.
On time.
Yeah.
It gets unwieldy to manage.
Yeah.
So in that sense also, investing as a fund is better. Also, it's useful to have external LPs because they infuse a sense of discipline.
That's right.
It's useful to have a fund structure because then there's a defined timeline for exit.
Yeah. It brings its own hygiene and structure of that business.
Yeah. So you audit it more seriously.
That's right.
You have SEBI oversight.
Yeah. So moving further, Sanjeev, now you started off your own journey as an entrepreneur and you learned your lessons, and then you graduated to investing with other entrepreneurs, working with them up and close. What has been your learning that, what is that one single thing in the founder which helps them to scale a profitable business?
I'll tell you, when you're a founder and you half succeed or you succeed, you believe you're the smartest person in the world. But the truth is, there are plenty of other smart people out there. Several of them smarter than you. Several of them thinking bigger than you. So I think my biggest education has been that there are lots of younger people out there who will be backed, younger than me, I'm 62, who are super smart, who are better than me as entrepreneurs. And we are fortunate to have backed them and we have learned from them.
Yeah.
So, and we have also created value for our shareholders through that.
And that belief has got validated that, your the amount of value which they've created for Info Edge is actually much more than the Naukri's business.
So I think it's important to understand that Zomato market cap, I don't know what it is right now, but will be about 2-3-4x of Info Edge.
That's right.
And that's a lesson.
Yeah, that's a lesson. And this is, typically when you scale in life is that you have to go beyond yourself, find people who are better than you, the cliched management thing that you surround people better than
we didn't go out to find people better than us. We went out to find smart people. Doing interesting stuff.
Yeah.
Or shayad kuch ho jaye. And back them with the first check and see what happens. And then as they do well, keep on backing them further and further.
So now, was there a difference in their thinking? There would be, because they build the businesses differently the way you build. What was that one or two things in which their thinking was different than yours? Say Yashish's thinking,
Deepender's people were they would raise and deploy much more capital than we had ever done.
Okay.
First thing. Second, their ambitions were global. We'll be as good as the best in the world.
So thinking scale, they were thinking scale.
I mean, they were not thinking that anybody in the valley is better than us.
Yeah.
They had no complexes.
So there was no caution, there was...
No, there was caution. I mean, that's how you survive. But it was not as if वो शायद डरते कम थे.
Fearlessness.
Not fearlessness. I mean, look, every entrepreneur, every sensible entrepreneur has to be fearful to some extent. But they said, but they had the guts to bat on the front foot.
Yeah, very interesting. So maybe, I don't know whether we can call it a generational shift, but a shift in the line of thinking of an entrepreneur.
Which was caused by a larger market,
Yeah.
therefore a bigger opportunity, availability of capital.
Availability of capital was a very big thing.
Yeah. Both these things. So larger market, availability of capital, their own ambitions.
Yeah. Because, you know, frankly, when you were starting, the market size was very small and there was no capital available. So you had to be very cautious.
And I had bootstrapped for 7 years.
Yeah, yeah.
So, you know, we were very, very frugal.
Yeah.
That became a way of life for us. But, you know, when times change, it's a new entrepreneur.
Yeah.
Doing it differently, and many of them succeeding.
Yeah. No, great, Sanjeev. So now let's talk about some of the, you know, very key attributes, you know, which entrepreneurs have, and you've done this for the longest time, over a generation or so. So what is the role of patience, you think, in the journey of an entrepreneur to build a sustainable business?
Look, to build a truly decent, good company, minimum 10 साल लगते हैं मेरे ख्याल से, कभी 15 साल लगते हैं.
That's right.
And then the growth does not end there. But you can, at the end of 10 years, you can say, okay, we've done something.
Yeah, yeah.
And for that, you need to be persistent. And patience doesn't mean you sit and wait. Persistence means you keep on trying.
That's right.
And making it happen, but it takes 10 years.
Maybe endurance, if not patience.
Endurance, yes.
Yeah, endurance.
As an investor, we have to be patient.
Yeah.
An entrepreneur has to demonstrate endurance and resilience and persistence.
Because we just discussed as an analogy of a trek. In trek, you know, I think what you need more is endurance. So that you don't give up your trek.
That's right.
Yeah. So that is very, very important. So great point. Now we are living in times when capital is readily available, but still we go through cycles, markets go through cycles, and the last some years, you know, capital is there, but it is not, investors are not ready to sign the check. So what would be your advice to entrepreneurs who's got just 6 months money left in the bank, a runway of 6 months as it is called, and what decisions should that entrepreneur take to survive?
Well, one obvious thing is you've got a product that's saleable. Please sell more, sell better.
Okay.
Please be in the market selling yourself.
Uh-huh.
You've got to lead the sales effort from the front.
Okay, that's a great point.
It's not something to delegate. Because you are the best salesman of your product.
Yeah, yeah,
You have the most conviction.
yeah.
You have the most belief. You are getting feedback then directly from customers to improve the product. You are setting an example for the other salespeople. That sales is a good thing to do, it's a great thing to do.
Yeah.
And sales is what will save this company. Now, if you don't have a product ready and you're pre-revenue, then you have a bigger problem.
Yeah.
You cut costs, you downsize, you somehow raise the money.
Yeah, yeah. So basically, cash flows is what sustains the business. So you have to have something which brings
And
money.
operating cash flows from customers are the best cash flows.
Yeah, yeah. Best businesses are the ones, you know, which are funded by customers.
Exactly.
Yeah. So that is what has to happen. Now, you had the unique, you know, advantage, or so to say, the experience of also being an operator as well as a venture investor. So personally, at an individual level, what is the key difference between the two which you've experienced?
Therefore, entrepreneurs like to be in control. Entrepreneurs like to do it themselves. Entrepreneurs like to believe that they know best. Right? That's how I became an entrepreneur.
That's right.
Okay. कि ये मैं करूँगा, कर सकता हूँ, और करके दिखाऊँगा, और खुद करूँगा. And if you start life as an entrepreneur, you know, and you transition to be an investor. See, as an investor, it took me 3 years to understand and realize and accept that most founders will not listen to me.
Oh, very
Because they have their own ideas.
Yeah, of course.
So you give them 10 ideas, they'll be polite.
Yeah.
You know, you put the money, you're a shareholder, you're on the board, whatever. They'll be polite. But they will ultimately do what they think is right.
Because that's what makes them an entrepreneur.
That's what their responsibility is.
Yeah, yeah, yeah.
So as an investor, you have to be willing to suggest, not direct.
Very nice line. Suggest, not direct.
Now that, after being an entrepreneur 10, 20, 15, 20 years, becomes a bit of an adjustment. First in your head and then your behavior.
That's right.
So you're not the founder's boss. You're an investor. Okay? And you gotta, and then lots of many nuances here, but you gotta be willing to be that.
That's right. So you're founder's enabler, as you learned that you're not his boss, but you're founder's enabler.
And the founder may not think you're enabling. Even think you're getting in the way.
Yeah.
Be careful.
Yeah. Because that would have been a very interesting on-the-job learning for you, because shifting from an entrepreneur, from the driver's seat to being an enabler. So I think first 2-3 years, as you said, you would have approached investing like an entrepreneur yourself.
Yeah, I would have sort of so deeper into it and said, aise karo, aise karo, aise karo.
So now that you've understood that you have to enable, so when you
give time and space
to
the founder, keep talking, keep reading, discuss, suggest. Understand that if there's no buy-in in the entrepreneur's head, he will not do it. If he does it, he will not do it well.
And when you look for investing opportunities, what are those 1 or 2 critical things which you look in a founder?
I think the first thing we look at is that, are they solving an unsolved problem? Does the customer want what they are doing?
Okay.
Will the customer want what they're doing is not launched yet? Is there a customer insight? Is there an unsolved problem?
Okay.
Is there any evidence of what we call natural traction? कि अपने आप traffic आ रहा है, usage हो रही है, they're not spending on advertising, they don't have money, they're broke, but still traffic is going up. Right? So that means they're onto something. So अगर natural traction आ रहा है, and the team is good, it's probably worth going in.
But what about, let us say, even if the entrepreneur is not solving a new problem, it's an existing problem which is being solved by half a dozen more businesses, but the market size is so big.
See, if it's a winner-take-all market, right, and there's 7 people doing it, be careful.
Okay.
I'm not saying don't do it, but be careful. If it's a winner-take-all market, and there's 7 people doing it, but you have a right to win, you can still do it.
Okay.
Is there some IP being built? Is there a network effect? Is there something here that gives them an unfair advantage?
Okay. Yeah. Because that's how they will be able to stay in the game and build something.
Yeah.
And 1 or 2 things which you see in a founder which makes you know this is not the one, इसमें नहीं पैसा invest करना मुझे.
So you don't know, right, when you go in early. Right? What you look for is there any sign of lack of integrity? Is there a willingness to go out and meet customers yourself? Is there a bias for action? Is he the kind of person who can attract talent? Is he a magnet for talent? He or she?
Very important, yeah.
Will they treat minority shareholders fairly? What are their views on ESOP? What kind of salary do they want to pay themselves after we give them money?
Yeah. These are character filters, great points.
These are just, and then you go in here with and then you get 2 out of 10 right actually.
Yeah.
So,
So this is gold of wisdom, which you can only learn by the journey of life, which you've
and
lived.
you still make mistakes.
Yeah, you still make mistakes. And because perfection is never achieved. Are you fond of reading books?
I used to be a voracious reader. And in the last 7, 8, 10 years, maybe 15 years, I've lost my reading habit.
Okay.
I've got too hooked onto reading stuff on a small screen.
Yeah.
I keep buying books though. And my, basement looks like a bookstore. Which is why I really like this place and I feel very comfortable in this environment.
Yeah.
And I recently learned that there's a Japanese word for this. So that gives me some validation and comfort. The Japanese word is called sundoku, Tsundoku.
Oh, I see.
And what that word means is someone who is in the habit of buying books and not reading them.
Feels good seeing books around, surrounded by books.
One day I will read, you know.
Yeah, yeah. But in your early days, you know, as you used to be, as you mentioned, voracious reader, any one book which left a mark on you?
I mean, so the two books which I read maybe a decade or decade and a half ago, Built to Last and,
Built to Last,
and
yeah.
Good to Great.
Yeah, yeah,
We both have one common author.
yeah,
One is on how to create companies that last a long time, because that's what we wanted to do.
yeah,
Other is how companies transition from being merely good to becoming great. That's another ambition.
No, these are great, you know, all-time classics and must read, I would say, with any entrepreneur or who wishes to be an entrepreneur. Now, with all your wisdom, Sanjeev, what would be your one or two takeaways for the current generation of entrepreneurs who are starting out now?
I think the first thing is be close to the customer. This is ancient wisdom in business. That has not changed.
Yeah.
Be close to the customer, talk to the customer, observe, figure out the customer's unsolved problems. Because if you solve someone's unsolved problem,
Yeah.
they will pay you for it.
Yeah. And at the end of the day, every business is basically you solving a problem for the customer for which he's willing to pay.
So great businesses are built on deep customer insights,
Yeah.
and deep customer insights about an unsolved problem. Solving an unsolved problem has many implications. It means you're innovating. Unsolved problem है.
Yeah.
तो आप कोई नई चीज़ कर रहे हो to solve that problem. You're first mover
Yeah.
because that's why it's unsolved.
Yeah.
Now, first mover carries risk, but it's a necessary risk because you will succeed if you're first mover. You will succeed if you're an innovator. If you are the fourth guy trying to do something, you will struggle. So, risk lower है, but chance of success also बहुत lower है.
But are you saying then in a scale of a market like India, are we looking at only duopolies or
No.
monopolies?
No, certain businesses are, I guess, natural winner-take-all markets, right? But many are not,
Yeah.
and you can always niche it,
Yeah.
even if there are 5-6 larger players there.
Yeah. And one last question before we wind this up, that if an entrepreneur is starting his journey today, should he or she build a business to last or business to sell? Or build to last or build to sell?
देखो, building to sell is a crazy risk proposition because then you're serving a prospective buyer who doesn't exist today. Whereas build to last, you're serving your customer.
Yeah.
So people who buy businesses are buying businesses that are built to last.
That's right.
अगर आपको बेचना भी है, make sure it's built to last.
And if it is a build to last business, then
You don't have to sell.
you don't have to sell, and even if you have to, you'll find many buyers.
No, that's
Yeah.
right.
So I think that's a great takeaway from this. Sanjeev, thank you very much
Hey, thank you for calling me.
for doing this, and
Thanks so much.
I'm sure our viewers are going to love this, the insights.
Thank you.
And thank you very much.